Now, I know what you're thinking. How the heck does a 52-year-old, over-the-hill milkshake machine salesman build a fast food empire with 1,600 restaurants in 50 states, 5 foreign countries, with an annual revenue of in the neighborhood of $700 million?
McDonald's operators have had enough. For decades, they've put up with McDonald's anti-franchisee policies and aggressive corporate politics just to have a chance at growing a thriving restaurant. But the more time they put in, the more they realize that this deal is far more favorable for McDonald's. The average franchisee pulls in $150,000 per year from each restaurant, which sounds great until you realize you have to invest $1 to $2.2 million to get your hands on a location. In other words, operators are running a full restaurant business just to earn a 10% return on their investment. Instead of putting in all this effort into running a restaurant, operators could just invest their money into the S&P 500 and earn comparable returns with absolutely no effort. This is only made worse by the fact that as a franchisee, you're not even building up your own brand. You're building up McDonald's brand, which is doing better than ever. You know how there's all this fear about recessions, layoffs, bank failures, interest rates, and whatnot? Well, despite all that turmoil, McDonald's is doing better than ever. They're one of the only companies whose stock is at near all-time high levels, giving them a valuation of just under $200 billion. A similar story can be seen with their net income as well. In the last 12-month period, McDonald's profited just over $6 billion. If we divide that amongst their 38,000 locations, we get an average income per store of $162,000, or even more than the average franchisee. Given McDonald's brand image, it's not surprising that they're able to charge such a premium, but more franchisees than ever are starting to question whether all of this is even worth it, and for many of them, the answer is no. In 2021, a record 13% of franchise-owned locations changed hands. For perspective, only 6% of Burger King franchise locations changed hands during the same time period. If we zoom out a little, it just looks even worse for McDonald's. Between 2019 and 2022, 28% of McDonald's locations were either closed or sold off. And according to operators, it's only getting worse. There is apparently a line to get out the door. So here's why McDonald's operators are leaving in droves and the frightening implications for McDonald's. McDonald's likes to write off the exodus as simply pent-up demand from the pandemic, but in reality, there was a pivotal event in 2018, remodels. This marked the biggest remodel in the company's history in decades, and it was required. McDonald's wanted new furniture, new decor, remodeled counters, exterior redesigns, digital kiosks, and reimagined drive-thru lanes. Even if you only go to McDonald's on an occasional basis, I'm sure you've noticed these changes. And honestly, they're pretty nice, but they were also quite a burden for franchise owners. McDonald's offered to pay 55% of the renovation expenses for the affected 14,000 US restaurants, which came out to a total of $6 billion. This means that the average cost to renovate each store was a whopping $779,000, out of which operators were responsible for $350,000, and that's just the average. For older, more outdated stores, the renovation expenses were probably closer to $1 million, if not over, which pushes up the operator contribution to nearly $500,000. This is made even worse by the fact that the stores that are most likely to be outdated and run down are the ones that aren't performing well. In other words, the stores that are performing the worst would likely have to pay the highest bill. For 40% of operators, this was completely unfeasible, as the remodel expense would put them in danger of not having their leases renewed based on McDonald's own financial requirements, though McDonald's does dispute this number. For obvious reasons, operators were triggered. In fact, when asked to rate the relationship with McDonald's from a scale of 1 to 5, the average operator gave a rating of 1.19, and that was in April of 2022. This was the third worst rating in the survey's history, and the 2 times that it was worse were both during the height of the remodels. All of this tension would lead to the creation of basically a franchisee union named the National Owners Association in 2018, which was the first of its kind in the company's history. The association has been trying to advocate on behalf of operators, but it doesn't seem like they've been able to make much tangible progress. In fact, McDonald's has not only not backed off, but they've tried to offload even more of the remodel expenses onto operators. The most notable example of this was a new technology fee that McDonald's implemented in late 2020. Apparently, McDonald's was racking up too much debt, so they decided to charge operators a $70 million technology fee. Operators would end up suing McDonald's, but even this didn't eliminate the fee, though it did reduce it by 60%. It seems that McDonald's has gotten into a habit of prioritizing end consumers and shareholders over everything else, which isn't a bad thing in itself. The reason that it's bad in McDonald's case is that they're doing it at the cost of operators, which is not exactly a very smart move long term, given that 93% of their locations are operated by independent business owners. But expensive remodels and annoying technology fees are just the tip of the iceberg. The truth is that the entire partnership between operators and McDonald's is just a facade. When you think McDonald's, we all think burgers, fries, creepy clowns, and big golden arches. But what if I told you that McDonald's doesn't actually make money from any of this? While these are what us consumers associate with McDonald's, the reality is that we're not even the real end consumer of McDonald's. The real end consumer is actually operators, and if you don't believe me, just take it from McDonald's former CFO himself. We are not technically in the food business, we are in the real estate business. The only reason we sell 15-cent hamburgers is because they are the greatest producer of revenue, from which our tenants can pay us our rent. This might be confusing because it's been ingrained in all of our minds that McDonald's is a fast food company. But in reality, McDonald's figured that that wasn't all that lucrative decades ago. I mean, just think about it. Even if you sell billions of burgers every year, if you only make 10 or 20 cents on each burger, it's not gonna be that much money on a company scale. If you own the lands of tens of thousands of the most desirable locations in the world and charge operators massive leases though, well, now you're talking. This is magnitudes more profitable than selling burgers, and it's evident in McDonald's market cap. They're worth over 4 times more than the second largest restaurant chain, Chipotle, and they're worth almost 20 times more than Domino's. This isn't to say that McDonald's is 20 times more popular than Domino's or that they sell 20 times more food, but it does mean that their business is 20 times more attractive for investors. While this model is brilliant for investors, it hasn't been all that friendly for operators, especially over the past few years because of the real estate boom. Right at the beginning of the pandemic, the Fed cut interest rates to 0%, which led to real estate across the country going absolutely wild. And given that McDonald's is a real estate business, I don't think you'd be surprised to see that McDonald's total assets also went wild. But this didn't exactly sit well with operators. Here, they were struggling to pay cashiers and burger flippers minimum wage during one of the worst hospitality crises ever, while McDonald's was doing better than ever. Of course, you can argue that all of this is in the fine print and that operators should look into all aspects of the franchise before signing, and that is true. But with that being said, it's also natural for people to get mad in such a situation. When you sign up for a franchise, you expect to be partners with the company. You expect to share in the good times and the bad times. But in McDonald's case, it seems like the partnership is cleverly structured such that all of the risk of running a low-margin fast food business lies on the operator. And for many operators, the pandemic was the eye-opener they needed to see the partnership for what it really was. And now that things have finally stabilized on their side as well, they want out. If these one-sided policies weren't a good enough reason to leave, yet another reason to leave is that modern generations aren't as eager to get into the fast food business. Traditionally, many McDonald's locations are run almost like a family business. A family might own a few locations in their hometown, and they pass it down generation after generation. But for the first time, the new generation doesn't want it. And it's not just that McDonald's franchisee policies aren't that great, but also that there's way more opportunities out there thanks to the internet. If you're gonna go down the partner with a big company approach, why partner with a fast food company when you can partner with a tech company? You can become a Google AdWords partner, or a YouTube partner, or an Amazon affiliate marketer, or an FBA seller. The options are basically endless online. Also, you don't even have to go down the entrepreneurial route. In the Western world, you don't have to run a business to make $150,000 per year. There's plenty of jobs that pay the same or more without the stress of running a full-on restaurant. So, naturally, despite putting in decades into the business, many families want out. These families would of course prefer an amicable split, but McDonald's is making this rather difficult as well. First of all, they don't even question you about why you're leaving, which is quite surprising. I mean, if you're trying to cancel a simple cell phone plan, you'll run into 4 sales reps asking you why you're leaving and trying to convince you to stay. But at McDonald's, not a single person asks operators why they're leaving, which simply strengthens the idea that they don't really care about their operators. That's quite a shame, but the bigger disappointment for many operators is that they don't even get to choose who they hand off their location to. If you spend 30, 40, 50 years building up a location, it would make sense that you want to hand off the location to someone you know and trust. But McDonald's is often blocking this outright. You see, on paper, they have the right to first refusal. Traditionally, this wasn't enforced very strictly, but given that many operators are starting to take a stand against McDonald's has resorted to leveraging this right more aggressively. This way, they can route the stores to more passive investor operators, but that just makes the situation worse for all of the remaining everyday operators. All of this is leading to operators not even missing the business that they worked on for decades. And as more and more operators start feeling this way, the McDonald's operator exodus is only gonna get worse. For franchises, it's usually the operators that can make or break the business. McDonald's has cleverly structured their business to minimize the impacts from unhappy operators, but even this will only shield them so much. At the end of the day, if operators drop the ball on running these stores, people will have a worse experience at McDonald's and they will come less often. Eventually, this would lead to locations becoming unprofitable, meaning that operators won't be able to pay McDonald's their cash cow lease payments. And if a location is already performing poorly, it's just gonna be even harder to bring in another operator and try to turn things around, especially if that operator isn't all that happy to be there either. McDonald's isn't quite at that point yet, but given that 28% of stores were sold off or shut down within the past couple of years, it won't take long for things to get that bad if McDonald's doesn't take any action. So I think it's in McDonald's best interest to get on the good side of their operators as soon as possible, unless they want to continue facing this mass exodus and ruin their business in a record time. But that's just what I think. Do you like McDonald's? Comment that down below. Also, drop a like if you think that McDonald's operator policies are brilliant, but also terrible. And of course, consider checking out our Discord community to suggest future video ideas and to consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.